Hey guys, welcome back to a brand new video. I'm RexFinance, and today I'm going to be comparing two different companies in the clean energy industry. One of those companies is CleanSpark, CLSK Stock. And for those of you that might be new to my channel, I've been invested in CleanSpark since it was around $4 per share. Since then, it's topped $40, and currently we're right around $30 per share. So I've seen great investment return. And during all of this time that I've been invested in the company, we really haven't seen another public company that represents a true competitive threat to what CleanSpark offers. And that's part of the reason CleanSpark has seemed like such an enticing investment to myself and many other people out there that might be watching this video. But all of a sudden, we have a new hot SPAC on the street. STPK Stock, or Star Peak Energy Transition Corporation, will be reverse merging with STEM. And STEM appears to be the first legitimate competitor to what CleanSpark offers. So in today's video, I'm going to be comparing the two and which one I believe to be the better long-term investment. If I'm being honest, I believe STEM and CleanSpark represent great investment opportunities. They both are a part of a small handful of companies out there that are growing at rates that virtually no other company can match. That means that 99% of publicly traded companies can't even fathom the growth rates that CleanSpark and STEM are both going to experience over the coming decade. Now, obviously, me being a CleanSpark shareholder, I might be a little bit biased here, but I'm going to do my best to avoid any bias I may have and really dive deep into the differences of these two companies and which one I believe is going to be the better long-term investment. Now, these two companies are extremely similar, and this is kind of a warning for anybody watching this video. To understand the differences between the two companies, we're going to have to get into the fine detail and some complicated terminology. But before we get into this video, I don't generally do this, but this video took me hours of research to put together. So if you guys wouldn't mind hitting that like button down below, it would be greatly appreciated. Also, while you're down there, if you're new here or returning and not yet subscribed, hit that subscribe button so you don't miss future episodes. As a last note, if you guys have any interest in joining my private members-only Discord server where you get early access to stocks I'm looking at, my buy and sell alerts, etc., feel free to hit the join button located right next to that subscribe button. It doesn't work on an iPhone or an iPad, so try a different device. So to begin to understand the differences between these two companies, because again, they are very similar, we have to understand their similarities. And their similarities are that they both offer hardware, software, and network integration services. Now, STEM's hardware sales come from their sales of battery and energy storage units. CleanSpark's hardware sales, on the other hand, come from their automatic transfer switches and switchgear sales. So although the hardware sales represent a difference between the two companies, it's really not what matters in this industry. What matters in the microgrid or smart grid industry is the software solutions. And in doing my own research, I have found that both CleanSpark and STEM have great software solutions. But what is the difference between the two? And there's a very, very minimal difference. For starters, STEM's only software solution works with batteries. CleanSpark has several software solutions that work with the microgrid as a whole. So one way to think of the difference between these two companies is that STEM is more focused on the battery optimization side of things, while CleanSpark is focused more on the entire microgrid as a whole. One key difference between STEM's software solutions is that they are not hardware agnostic. CleanSpark software solutions are hardware agnostic, meaning CleanSpark software works with a variety of hardware utilities. You can think of those utilities as solar panels, wind turbines, etc. STEM's software solution only works with their hardware sales in the battery. And this is a key point. In doing my research, I found nowhere that you can buy a subscription to Athena, which is their software offering, without buying their battery or energy storage unit along with the software. With CleanSpark, you can purchase the software which works with the utilities you already have installed. You don't need to buy a new CleanSpark branded battery in order for the software to work. This means that STEM's revenues are always going to be predominantly coming from hardware sales. While on the other hand, CleanSpark has plans to make their software be their predominant revenue stream sometime over the next 2 years. So, why does this matter? Well, it matters because hardware and software have very different margins on them. Software exceeds 80 to 90% gross margin in some cases, while hardware only represents 10 to 30% margin maximum. What this means is companies that focus more on software are going to be more profitable than businesses that focus more on the hardware. There is a reason a company like Apple has transitioned away from hardware sales and they're more focused on software sales now. And it's because the margin is so high on software. So obviously when we look at the different revenue streams and how big they're going to grow for both companies over time, I would give the benefit of the doubt to CleanSpark in this case. However, although STEM will have lower margins and lower profitability overall, they also will have a larger total addressable market, or TAM. This is simply due to the increasing demand for battery and especially smart batteries, which is what STEM focuses on. So when we compare the total addressable market for CleanSpark and microgrids as a whole compared to batteries and battery optimization as a whole, STEM wins that battle by a landslide. So if that wasn't already too in-depth for you, I'm just going to warn you, this next part is going to get very, very fine detail and complicated terminology. I'll put up on screen in text what I'm about to say so you guys can pause the video, read through what I'm saying, and really digest what I'm trying to say. One of the other main key differences that we can look at between these two companies is that STEM looks at the overall grid and tries to find how to get power cheaply. On the other hand, CleanSpark looks within the grid and can take in more inputs and outputs to modulate the actual usage of energy within the grid. So again, very complicated terminology. If you need to pause the video and go just read that text to digest it, I would not blame you. I would actually encourage it. So hopefully to explain this more in layman's terms, one way you can look at this is that CleanSpark has more pieces to the pie. They continue to expand on their entire microgrid offering. We've even seen this as recently as a couple weeks ago when CleanSpark announced an acquisition of a solar developer who deploys microgrids and deploys solar panels onto homes. STEM is very good at what it specializes in, and it specializes in this battery optimization like we've talked about. But energy storage and batteries are only one small part of the overall microgrid. This is where we come back to the fact that CleanSpark has more offerings, more software solutions that can work within the grid to really achieve optimal results, while STEM specializes in the battery optimization software. And it's kind of funny, but if we look at CleanSpark and their current offerings, we see that the one key piece to the microgrid that they're missing is an energy storage system. They're missing basically what STEM does and what STEM specializes in. And there have been rumors circulating everywhere over the past couple weeks that CleanSpark was looking at a joint venture, partnership, or even an acquisition for the energy storage side of things. Now, do I think it's going to be with STEM? No, I don't. But I took the liberty of emailing the investor relations team and Matthew Schultz in particular to see if there's any updates on this rumor, if there's any truth to it. And right now, I'll put that email up on the screen because I think a lot of you CleanSpark bulls out there are going to be very, very happy about this. And again, I just want to highlight the energy storage side of the microgrid as a whole is the only key piece that CleanSpark seems to be missing at this point in time. So here's my email that I wrote to Matt. Good morning, Matt. I hope all is well with you. I'm curious on the battery front of things. It seems like something on the battery storage side of the microgrid is the only missing piece to the puzzle for CleanSpark to fill. I know you've hinted at a possible battery partnership, acquisition, or joint venture in the past, and a lot of investors are anticipating some news on this front in the future. Are you able to provide some details on this? I'm making a video comparing STEM to CleanSpark, and STEM is very involved with the battery side of things. If possible, could I get permission to put your response to this email in the video? And this was his response. He says, "Hey Ben, I appreciate the email and the thoughtful question. The short answer is yes, we're working on a fully integrated energy storage solution. We expect it to be a complete CleanSpark branded product with individual suppliers supporting in specific business or chemistry units. There are a number of moving parts, so we're not currently at liberty to announce the strategy publicly in any more detail. Suffice it to say, much the same way that our Bitcoin team has sourced mining rigs in the face of a global shortage, we've also identified supply chains for ESS, energy storage systems, that give almost immediate access. We'll be discussing all of this and more in the coming weeks. As an aside, I don't know if you've noticed, but NBC News published an article about microgrid solutions specifically discussed was CleanSpark. Additionally, BTIG initiated coverage on our stock yesterday with a buy rating and a $45 price target. I'm certain that the RexFinance subscribers are excited about that, and as usual, we're just getting started. Have a great weekend, Matt." So that's pretty awesome. He gave my channel and this community a shout out in that email. But it seems like CleanSpark is working on this side of things. They realize that this is a key piece of the puzzle that they're missing. Basically exactly what STEM specializes in. But as long as CleanSpark doesn't have a CleanSpark branded offering for the energy storage system side of the microgrid, STEM will always have the larger total addressable market. And in that email, Matthew Schultz mentioned the Bitcoin mining segment for CleanSpark. STEM obviously does not mine Bitcoin, but CleanSpark does. However, in this video, I'm trying to set the Bitcoin mining business segment of CleanSpark to the side and really just look at their microgrid offering to compare them to STEM. It's only fair. In that email, Matt also mentioned that NBC News was talking to CleanSpark specifically, and also he mentioned a new buy rating by new analyst coverage, with a $45 price target. So while we're on that note, let's talk about the valuation of the two companies. Right now, STEM is projecting that they will bring in $1 billion in revenue in the year 2026. Again, they will always be hardware sale reliant when it comes to their revenues, so they're going to be lower margin and lower profitability. And currently, their market cap is right around $4 billion. With the most conservative numbers that I have run for CleanSpark, I have come to the conclusion that they will reach $1 billion in yearly revenues by the year 2025 at the latest. So they're beating STEM to $1 billion in revenue by around 1 year. As I've already mentioned, CleanSpark's management team has repeatedly talked about wanting to be predominantly reliant on software revenues, where software revenues make up the majority of their overall revenues. And if they can accomplish that, they're going to have very high margin, and they're going to be a very profitable company. STEM is already very good at what it does in battery optimization. CleanSpark is going to have to develop that front even after they have a joint venture partnership or an acquisition that relates to the energy storage system. So I think it's safe to say that STEM right now has the larger total addressable market. Now, over time, this could change, but it takes time to develop software, fine-tune it, keep upgrading it in order to make it an applicable solution at the market. So CleanSpark has a bit of catching up to do when it comes to battery optimization and the offerings that STEM already has. CleanSpark also seems to be in the news a little bit more lately than STEM has, which probably has helped the share price quite a bit. As Matt mentioned in his reply to my email, NBC News actually talked with CleanSpark's CEO directly and got a quote for him. If you guys want to go to that article, I will post it in the description down below. Just click the link and it will take you right to it. So I'm obviously very bullish on CleanSpark, but you may be wondering if I think STEM is a good investment. And personally, I think if you have a long-term mindset, STEM is going to be a great investment. Again, they're growing at a rate that only a handful of companies can match. They're in an industry that's growing at rates faster than any other industry. So all that needs to happen is execution, and they are already very good at what they specialize at. Now, when we talk about valuations, either STEM is overvalued and CleanSpark is undervalued, or the truth is somewhere there in the middle. Either way, CleanSpark seems to be the cheaper valuation, better investment at its current price. Now, if this SPAC, StarPeak Energy Transition Corporation, should crash after the merger goes through, like SPACs have historically done, I would definitely buy into this company, somewhere in the teens if it gets that low. So I think both companies are phenomenal investments. STEM, very good at what it specializes in. CleanSpark is more focused on the overall microgrid and working within that microgrid. They have more offerings currently. Now, something I didn't consider in this video with STEM is the growth and expansion that they can realize. However, I haven't heard any of the management team talk about expanding beyond its battery optimization business, so that's something we'll have to look for as time goes on. So right now, I would say I'm very bullish on both companies. It's a tough tell which one is the better investment. For now, I'm sticking with CleanSpark, but if STEM should crash after the merger takes place, I will more than gladly buy into the stock. So with that, guys, I hope you guys really enjoyed this video. Again, it took me a lot of research to put this together. If you enjoyed it, leave a like down below. If you guys are new or returning here, hit that subscribe button. Also, if you guys want to join my private members only Discord server, hit the join button down below, located right next to the subscribe button. With that, have a great rest of your day. Have a great weekend. I'll be back with a brand new video early next week. Peace out.